thank all the wonderful friends in this book: John Doerr, Jerry Yang, Mark Andreessen, Anne Winblad, Neil Weintraut, Naveen Jain, Jerry Kaplan, George Zachary, Steve Jurvetson, Esther Dyson, Vinod Khosla, Mark Gorenberg, Bob Stavers, Susan Gore, Band of Angels, Venture One, and PricewaterhouseCoopers. Some of the people behind the scenes who should be mentioned include Bloomberg Press's Jared Keeling, Maris Williams, Jackie Murphy, and the entire team there who edited my Hypermind creation. Most of all, I acknowledge the primordial entrepreneurial spirit in all of us that the Internet welcomes with open arms daily. Introduction. Get big fast, and then get bigger. The world now has a new clock, the web. Think Salvador Dali images merged with Stephen Hawking's boundless universe, and that's the webscape. With this new surreal time pace come new opportunities to define time, space, and the stars. The astronauts, venture capitalists. The Internet enables great ideas to rapidly become great companies, and to make the founders and original believers great wealth, at least on paper. But getting from concept to capital daunts new entrepreneurs in the Internet era, where time is warped, black holes are common, and turning hyper-ideas into hyper-businesses is a hair-raising adventure. The bumper sticker for the 21st century info entrepreneur is "Get big fast, and then get bigger." To do just that, more and more garage and grunge heroes turn to venture capital. It can provide not only money, but also allies, partners, and a fast track to initial public offering or sale to a larger company. The venture capitalists, VCs in finance parlance, are the new power brokers, banks, management providers, gurus, and mothers who hold the hands of the newbie ideaites, taking them past the training wheels stage into rocket racers. It's smart money, the people and their capital. It has to be smart. There's no time to make the wrong moves in a world where every great idea has a half-dozen imitators in 60 seconds. To understand venture capital firms, it's important to take a look at the role of a VC today. Venture capital continually evolves as technology changes, new ideas seek capital, and capital seeks new ideas. Venture capital has made the funding process for Internet businesses happen faster than for any other single industry, and on scales unheard of in the pre-digital era. Similarly precedent-shattering is the size of the opportunities, entire industries being turned upside down by the Internet, the record volume of investments in private and public companies, and the hatching of new services, products, brands, ways of communications, buying, selling, and exchanging information. All these elements, the rattle and hum of the approaching 21st century, all of these and more, taken as a whole, define what I call zero gravity, the model for business in the new millennium. The best venture capitalists understand the concept. They seed the ideas and make them grow into the next big things. Getting to know the VC, therefore, is one of the basic steps of getting comfortable operating in this new environment. If everything moves faster in the global computer network era, then a new term, and a new understanding to go along with it, is needed for raising money, plotting the future, or simply gaining an appreciation of the Internet's investment underpinnings. I call this hypercapital, the combining of venture capitalists and web entrepreneurs with connections of every kind to produce home-run investments and returns. It is a world as storied as Hollywood, as imposing as Manhattan, and as challenging sometimes as Mount Everest. In an era with information traveling as fast as light, the global computer network has become the place where gray matter, represented by your business notion, meets the sounding board of more than 24 venture capital firms who have hung out a shingle saying, "Knock here." Sometimes your knock can be a simple email with an executive summary, which can produce a phone call, a meeting, suit, tie, and all, and a check for real dollars to hire real people and take the next step. Other times it can bring a terse "thanks but no thanks." Firms that have had both replies have gone on to create multi-hundred-million-dollar valuation companies, with or without venture capital backing. As if entrepreneurs didn't have enough to worry about by coming up with the great idea and tweaking a product or service, suddenly they also have to become experts